Welcome to the Anton Stetner podcast. And today I've just got one question. Why do home prices in the U.S. continue to be stupid high? Because they really are. And it doesn't look like it's going down.
The short answer is supply. And for this today, I just went and dug through a little bit of data. According to Zillow, they just came out with a report talking about the hotness of the market. And basically, at like 45 to 55, you're the neutral market. Below that, you're in a buyer's market. Above that, you're in a seller's market. You can see when you look at their heat map that only the South and the Southeast are in potential buyer's markets here in the United States. And here's the top 10 hottest metros that are seller's market. Rochester, New York, they gave it a 169. Remember, 50 is neutral, so this is 3 times neutral. Buffalo, New York, also over 100. San Jose, California, also over 100. San Francisco, over 100. Syracuse, New York, 99. Hartford, Connecticut, 95. Ann Arbor, 90. Boston, Massachusetts, 89. Bridgeport, Connecticut, 89. And our hood here in Seattle, 86.
We made it to the top 10.
We're in the top 10 hottest metros in the United States right now. And we've been talking about this, about how feel everything heating up, and we're feeling it heat up more than normal here in the Seattle metro. And our subscribers, our local people, they know that. Okay, who's the coldest?
Yeah, and then define that hottest is hottest seller's market, where house prices are the highest, and coldest, now that we're going to go into it, is where it's a buyer's market because what prices are going down?
Not necessarily prices are going down. Inventory, days on market, things of that nature.
It's more favorable for buyers.
More favorable. So these 10 next markets are basically great for first-time home buyers, great for investors, and arguably these ones that are also super hot are great for certain investor plays. So the 10 coldest markets, Jackson, Tennessee, got a 9. That's frigid. Gulfport, Macon, Daphne, Brownsville, Beaumont? Is that how you say that? Beaumont, Texas, Longville, Naples, Punta Gorda, and Panama City. And once again, notice how they're all in the South. So the South and the Southeast is what is the coldest here in the United States. What's interesting when we talk about kind of these national numbers and we're looking at things nationally is people will say, well, not in my backyard, or that's not what's happening here, whether theirs is hotter or colder. Always understand that real estate is a local business on a local level. Your local economy is affecting it. The local supply is affecting it much more than the national. So next, what I wanted to talk about was this idea of just permits. So if we have a lack of supply, why do we have that lack of supply? And that lack of supply is from the lack of building permits. So as you can see right here from this graph, you can see going into the mid to late 2000s, we essentially crested a run rate of about 1.2 million housing permits. And then that number shot through the roof. So part of the great financial crisis was we were overbuilt at that moment. Then the great financial crisis happened. Housing collapsed. Building permits got lower than about 380,000 as their annual run rate. So from 2009 all the way to 2019, we didn't crest 1 million building permits a year. We then finally crest 1 million again in 21, 22, and then starts crashing again in 22. And right now we're sitting at just under 1 million. Realize that's the same level of homes we were building in the 70s, 80s, and 90s for perspective. So when people say, why are home prices going up? It's because we're just simply not building enough of them, brother.
And we've got more people.
And the U.S. population massively grew during that same timeline. And this also got a lot more unaffordable, a lot more expensive during that same timeline. So total housing permits, this is total. So this includes multifamily, which is your residential multifamily, 2 to 4 units. It includes commercial multifamily, which is 5 units above, and regular single family. So the bad news is year over year, housing permits are down 6.7%. So when we're telling all of our listeners and our subscribers that, hey, permits are down, which it means it's going to artificially force prices up, we're talking on a national level, but some markets are overbuilt. Ours here in Seattle is severely underbuilt, and that's why we're one of the hottest metros, which got us into the top 10. Single families are down 2.8. Your 2 to 4 unit multifamilies are about flat. Your big multifamilies are down 16% in permits. Why do you think that is?
Because not as many people are trying to build them because it's too expensive.
That's exactly it. Because when interest rates shot up through the roof, these large multifamily properties and projects don't make financial sense. And so you can see those numbers start to drop off a cliff. So for our investors, we've been talking about how late 2025 and 2026, this lack of multifamily inventory is going to hit us. And then you're going to see a rise in rents and probably a rapid rise in rents.
Now, you might have mentioned this, but I talked about costs being part of why there's not as many permits, but also just getting permitting is a headache as well. More so now. Like, how extreme is it on multi-family, 5 units or more versus like single family?
Oh, that's a really good question. Thank you for forcing me to define that. When you go to get a single family building permit, and once again, I'm kind of talking about the Seattle Metro here, that's going to take you between 90 days to 6 months to get that permit if you're ready to rock and roll. To go to get a permit for a 50 unit, 100 unit apartment building is going to take you a year to 2.5 years. So this time horizon is much, much longer to get the flywheel moving. So when we start dipping later this year and next year, with, in other words, a lack of multifamily supply coming, that's going to take it a couple years to get back online. But the problem is if interest rates are super high, and if we've got tariffs making it more expensive, and we don't have enough labor here making it more expensive, they're not going to push through as much, which means our investors are going to see an above average rise in rents.
It's not just 2x harder, 3x harder, 4x. It's compounded by the uncertainty of all those things put together. And that was the last thing I was going to say. The tariffs, we've never been in this situation like 100 years. We don't know what's going to happen. So as an investor, logically, you're like, you know what? I'm just going to go ahead and focus on single family, or maybe even put my money somewhere else.
Bingo. So that uncertainty, and you can see that in the stock market right now, uncertainty just causes money to pause. It just says, I'll wait, I'll figure out which way the wind is blowing and the new rules, whatever they may be, then I'll start once the rules have established themselves. So top 10 metros with the most single family permits. Now, once again, notice these are almost all of them are in the South. Houston, Pasadena, the Woodlands. 24,750 single family permits in the last year. You might be able to get a deal there. Dallas, Fort Worth, about 21,000. Phoenix, Mesa, Chandler, about 14,000. Atlanta, Sandy, 11,000. And so you go Charlton, then you go Orlando, Austin, New York, Los Angeles. So Los Angeles is the only city on the West Coast, and they only had 6,000. And then Nashville drops to 6,000. So you can see that the growth is really concentrated in new construction. So you hear these headlines, and they'll say, new construction inventory is overbuilt. And that is true of some areas in the South and the Southeast. That is not true on the West Coast, in Mid-America, North America, and in the Upper East Coast.
Now, would you agree that the population is part of the context of what's going to make it better or worse? Like, for example, just because Los Angeles is top 10 doesn't necessarily mean there's going to be more availability because there's more competition versus like Charlotte, right?
Yep.
North Carolina. It's number 5 on this list. That 8,000 is way more significant than some of these other cities because the population's less, right?
Yeah, absolutely. So I don't know the population of LA, Long Beach, Anaheim, but it's probably 6 million? Mm-hmm. And Charlotte is probably 700,000. You know what I mean? So that's a massive difference. That's a 10x difference with about the same level of permits.
Yeah.
The next item that I wanted to bring to everyone's attention is multifamily. Okay. So it's very interesting, and I would not have thought this, but New York, New Jersey, 18,600 multifamily permits. That's a massive amount coming through.
And that's a lot of it from Manhattan, right?
I don't know. It's the whole metro.
Oh, wow.
The whole metro. So when they talk about a metro, usually it's a large contiguous area. So for us, the Seattle metro is really like Tacoma to Everett, including Seattle and Bellevue. Dallas, Fort Worth, 11,000. Austin, 77. Houston, 7,500. LA again, another 7,200. Atlanta, 63. Wait a second. How did Seattle hit this list? I want our listeners, especially our local people, to pay attention to this. 6,029 multifamily permits. Put that in as a little cliff note in your brain. We're going to come back to that because that's a problem. It's a massive problem, and I'm going to explain here in a bit. Orlando, 5,300. Miami, 5,000. And then Phoenix. So the top 10 really concentrated, but a bunch hit here in Seattle and kind of in the LA area. What I wanted to come back to in relation to this is, for those of you that don't know, our listeners, I am unbelievably pro middle class, buy your first home, and real estate is a phenomenal wealth creation vehicle. And my fear when I read these stats, and I'm going to give you guys the exact numbers so then you can judge for yourself, is that the Seattle metro, which is basically, once again, Everett to Tacoma, is decimating the middle class and helping to push the renter nation even further right now. Here's how. If you look at single-family permits that were issued in the Seattle metro, in 2019, we did about 8,700, 2020, 8,800, 2021, 88, 2022, it's going down, 7,000. And then 2023, 6,300. And 2024, about 6,500. That is 1.6 single family permits per 1,000 people. 1,000 people, you get 1.6 new permits. Come on. That's not enough to replace the houses that are burning down, that are falling down, that are decaying. You're not building enough single families to even replace what is naturally falling apart just due to time and nature. But, and I wish you could see Benji's eyes right now. They're like the size of saucers.
I'm like shocked right now.
The multifamily in 2019, 17,862. Now remember, we only did 8,700 single families. So that's 10,000 more multifamilies for our renter nation. 14,000 in 2020, 22,000 in 2021, 19,600 in 2022, basically 11 in 23, and just under 10,000 last year. 2.4 units per 1,000. In other words, we are massively outpacing the apartments versus single family. They are pushing the renter nation. Now, whether this is ideology, whether this is development, whether this is money, whether this is the UGA, whether this is political government, political will, this is disgusting. And the reason I say that is, do we want a renter nation? Do we want renters only occupying every home in our community? Or does everyone deserve an attainable home? It doesn't mean it has to necessarily be a single family, but we really have to do something, because with it this far out of whack over the last 5 years, what's it going to look like in a decade? That's a problem. Makes me worried for my kids, man. I'm not going to lie.
Yeah, and so, but it's on both sides. The permits are low on both sides compared to recent history. And why like my jaw dropped when I'm seeing these, because when you paint that picture of 1.6 permits per 1,000 people, that means lots of competition for whatever is here.
Yes.
And you bring up a good point. There's probably a lot of things being toppled over or just like not even livable. I mean, houses are being aged out.
Yeah.
Right. And that means people have to move outside of the Seattle metro area.
Yes.
That means that there's going to be potential opportunities for developers outside of Seattle, or people just have to go out there.
Exactly.
So more homeless.
Unfortunately, with this forces the cost of living higher, both for renters and for home purchasers. Second, another way to look at this is that's about half of the multifamily permits, and the single family permits are down by about 30%. So there's less inventory coming, And we've been telling everyone more appreciation in the Seattle Metro. It's right here in the data. The data is telling you that you will have above average appreciation for the next decade because there is not enough homes. That's what it says. It says rent is going to get stupid higher here in Seattle. It's right there in the data. But what we do is we complain and we scapegoat instead of addressing the problem. The problem is very simple. Build more homes. Okay.
The solution is simple.
The solution is simple. I'm sorry. Build more homes. The problem is red tape, buildable land, cost of building. That's the problem. To kind of land the plane here, to wrap this all up, this is home prices across the United States according to Zillow's Home Value Index. And the tan color it's basically flat or neutral. And this is broken down on like a zip code level. And you can see that most of the United States, so I'd say 70%, maybe even 80% of the United States is some form of blue or dark blue, with dark blue being as high as 8% in appreciation year over year. And if you see a tan color, that's of course flat. And then the brown color is some depreciation. Well, what do we notice? Well, there's almost no depreciation across the United States. Where are those pockets of depreciation? Kind of right there in the middle of Texas where the big metros are. A little bit there in Louisiana, a little bit in the corner of Nevada, a little bit in NorCal, and then a little bit down there at the southwest tip of Florida. You see flat prices in the south and then everywhere else appreciating, due to the lack of supply and the lack of building permits. It's just that simple. In closing, or to kind of just wrap this up, for home buyers, the thing I want you to be thinking about is go on your local level and go look at active inventory and building permits to see what the supply in your area looks like today and in the future, and what does job growth look like. That's going to determine the level of pricing that you're going to pay. You'll also see this in days on market. You'll see this in percent of original list price. You'll see this in price reductions. For investors, you've got to figure out what your strategy is based on whether the market is rapidly appreciating, like here in the Seattle Metro, or depreciating. That's going to dictate the strategy that you should use. Also, the building permits on the single family and the multifamily is going to indicate the type of project you should be doing or the types of projects you should be purchasing for the future. For sellers, if you're in somewhere like the Seattle Metro, it's hot. You're in the top 10. That's awesome. Like, make hay. If you're in, where was that one in the bottom? If you are in Jackson, Tennessee, that's the coldest market in the United States. You need to be a motivated seller to be there. And what I'd like you to do is, hey, consult with your agent, consult with us. We're available at resg.com. You can reach us at 425-249-0214. And we're always happy to answer your questions about our market or about someone else's market. Overall, though, for the United States, expect appreciation and expect rent growth due to the lack of supply and the low number of permits that we're seeing right now heading into 2025 and 2026.